Will Alibaba work magic with your portfolio? You probably know the name Alibaba, but if not, if you associate it with caves and magic lanterns, no, it's the online retailer in China, but it's more than an online retailer. What is it? It's Amazon, it's Walmart, it's Citibank all rolled into one. It's a huge platform, and we're talking about Alibaba today because of its applicability to the blockchain and the blockchain technology that's going to be so important going forward. I know it's confusing. I know, especially for older listeners, and I put myself in that category, blockchain technology is not easy to figure out. But what it does, it allows suppliers to reach buyers all across the world through the platform of Alibaba. Alibaba is more than one company. It's about 6 or 7 companies, and it's done very, very well in the last 20 years. Let's look at the chart on Alibaba and see how it's done for investors, and you might be one of them. We're looking at the price in dollar terms because it's an ADR. It's a Chinese company, so it comes out of the Chinese market, but it's trading about $160 a share. I can't tell you because I don't know enough about Chinese accounting standards. I know these are global accounting standards, but at the end of the day, these are Chinese merchants selling, in many cases, to Chinese buyers. How accurate are these accounts? I think they're fairly accurate. This is obviously a global corporation. It's the first company in Asia with a $400 billion market capitalization outside some American companies. So it's a very, very large company. The fair market value may be in the $240 range in terms of price per share, and that could mean some appreciation if you're one of the investors. What do I like about Alibaba? I like it that blockchain technology applied to a consumer platform in Asia, where there aren't a lot of large box stores as there are in Europe and the United States, can do very, very well. It can bring down costs. It can match buyers and sellers all across the world, not using Asia as a format. It's a very, very cost-effective technology. What don't I like about Alibaba? And I don't know enough to say I don't like it a lot, but I have some concerns about it. The company that owns Alibaba is located in the Cayman Islands. There are trusts, there are layers of shareholders. It's not an ideal setup, in my view, for a company that largely is based in China. And I worry that with the regulators in China and the investors located in the Cayman Islands, that could, down the road, lead to some friction. But in the meantime, Alibaba has a good story behind it and ahead of it. It is expensive, although it may be cheap at the price if it's the future of capitalism. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.